Hello everybody and welcome back to Compounding Everything. For those of you that are new here, my name is Chris and this channel is dedicated to discussing all things investing, finance and business with the goal of helping you build and grow a long-term successful portfolio. Now, this video is going to be dedicated to Afterpay's most recent announcement. And I mean, it's no secret here that I've not been the biggest proponent of Afterpay over the last few months. So I thought I'd put together this video and talk to you guys about if that sort of position has changed or not from my end. Now, before I start this video, if you would like to support this channel, feel free to just gently destroy that like button. It really does help in continuing to spread the word and get these videos out to more people. So in saying that, to keep this video as short and simple as possible, we'll break down this report into 3 bite-sized sections, and then we'll move on to talking about what I think about this company now moving forward. So the first of these 3 sections will be their updated growth figures, the second will be their capital raising, and the third will be talking about the owners selling their stock. Now, of course, when it comes to updated figures, Afterpay, of course, have continued to grow on the trajectory that we all kind of expected. I mean, in this sense, it looks like they're going to be seeing around 100% gains year on year, pretty much across the board when it comes to sales, revenue, and new client signups. Now, when it comes to new retailers actually adopting this service, it looks like they're up about 72% over that same period as well. I mean, look, these are pretty incredible figures. If you were an early holder here, there is no doubt you'd be extremely happy with the current outlook and growth figures at this point in time. Diving into that a little bit deeper, when we look at growth, it does look like although UK and Australia are doing well and continuing to gain traction, the majority of this growth came from the United States. And I think it's worth touching on here that I am very concerned about the current economic climate in America and how it relates to Afterpay directly. I mean, their ability to collect on these debts could be a massive concern for Afterpay right now. I mean, you've got America with a record-setting amount of COVID cases appearing almost daily and a record unemployment rate. Like I said in my last video, does it really surprise you that we have such rapid growth of a service like this in a country that is struggling so much? I mean, people will do anything they can to get by, including gaining access to easy capital like Afterpay offer. But anyway, we will touch on that a little more in a second. Now, when it comes to capital raising, Afterpay is undertaking a fully underwritten institutional placement to raise $650 million. Alongside that placement, Afterpay co-founders have also agreed to sell just over 2 million shares, representing around 10% of their respective holdings in Afterpay. Also, there is a retail offering via a share purchase plan of $150 million that will allow retail investors to acquire around $20,000 worth of new shares, which is obviously going to strengthen their books. However, as mentioned in this report, the aim of the game here with all of this raising is to try and continue to grow the company and exceed current rates. Now, although dilution may be a concern for some, it is worth mentioning that the approach taken here by the founders to sell some of their shares does help in navigating some of the dilution issues that may have previously been a concern. Now, of course, that brings us to our next point, which is the founders selling their stock. Although this is a touchy subject, I think it is worth noting here that this is probably, in the grand scheme of things, a moot point. And you can't blame these guys for going out and selling a tiny part of their holdings while this company is at all-time highs. I mean, after all, they're normal humans, and it is reasonable for them to liquidate some of their holdings to better strengthen and protect their personal finances. So no, I don't think this should be a massive red flag for shareholders at this point in time. I mean, yes, it's funny for us to joke about this on the internet, but at the end of the day, it does seem very reasonable for these guys to be doing what they're doing. So the last question to answer here would be, has my position changed on this company and do I think they're a buy? I mean, after all, I've told you guys how great of an idea I think Afterpay is, and clearly they're proving that growth is no obstacle. So they've found a great idea and proven the need for it. That's literally business school 101. If you tick these boxes, you're probably onto a winner. So why not just buy these guys knowing that this is probably going to keep growing and increasing over time? Well, that's actually a great question. And I mean, at the end of the day, right now, Afterpay are trading at least 15 to 20 years ahead of earnings. Just think about that for a second. Current shareholders are so confident in this company that they think not only will it become profitable long term, but they are worth 20 times more than their current capacity. I just find that hard to get my head around. I mean, what I'm always looking for as a long-term investor is a margin of safety when buying in, the ability to provide long-term growth, and a positive earnings per share. And look, I can hear the comments already.
But Chris, stop looking at this as a fundamental company. They aren't. We're growth investors. We don't want a positive earnings per share.
Okay, fine. Let's just take a minute to sit in your world, because here's the thing. I like your world. It's fun. It's exciting. But you can't have it both ways. So if you want to take fundamentals off the table, fine, do it. But you cannot ignore the risks right now. You cannot ignore the melting economies around the world. You cannot ignore record unemployment. You cannot ignore the uncertainty surrounding this space in general. And you cannot ignore that we don't even know if these companies can provide meaningful profits at these levels over a 10+ year period. If you are buying in at $70 per share, you are buying in well over 20 years ahead of earnings. And essentially you're just saying, well, stuff it. Let's just roll the dice. And look, that's fine. I'm not judging you, but don't try and make this some weird sort of fundamental / growth / Bitcoin proposition. Call it what it is. This is a gamble, and there's nothing wrong with that, but own it. Say, look, I don't know, mate, this could be $20 tomorrow or $2,000 tomorrow, and I'm just on for the ride. And that's fine. I'll give you a high five and we can carry on, because at the end of the day, the stock market is full of ways you can make money. Every transaction is literally somebody disagreeing with another. I mean, that's why we have buyers and sellers, right? So no, if you haven't guessed already, I'm not buying Afterpay and probably never will. But I'm just some random guy on the internet, and you should do your own research and come to your own conclusions. I've said this 100 times over. Afterpay is an incredible company doing what banks wish they could have done a decade ago. The founders are brilliant, and yes, if I could go back to 2017 and hold that trade I made, I probably would. But right now I can't, and current valuations are just way off any reasonable expected returns over the long term. Anyway guys, that's enough from me. Thank you for watching this video. If you did enjoy the video, feel free to tap that like button, and also feel free to press the subscribe button and the little notification bell next to it so you can stay up to date on all of my future videos. Thank you for watching, and I'll see you again in the next episode. Cheers.
What are you doing here? The movie's over.
It's over. Go home.